What's going on, y'all? It's J-Ro, and I'm giving y'all a tutorial on how to trade using a 200 SMA. And this will go for any SMA on any time frame that you're using. And you basically are just going to pretty much how the ins and outs on how to use a moving average and how to trade with one. So, from a basic understanding and a technical understanding of the market, moving average is basically showing you the average price of whatever you charting of the last so days. So this moving average for this first example, this blue one, is a 200 moving average. So the average price of the last 200 days, because this is the daily chart. So this line is indicating the average price, as I explained, and how you would want to trade from. You want to trade to it and from it. That's how I like to think about it. So perfect example is this is how a moving average indicates a trade. So you want to see two consecutive closes below or above the moving average. So as you can see here, this is two closes above. So your trade would kind of look like this. So this is 200. You got your entry at this candle, and the next candle will be your, I guess, the candle following this entry candle. So as you see the entry, and this is an easy trade pretty much with a 200 SMA. Your stops will be below the previous candle, which is this, the previous close but above. If your bias is bullish, it'll be the previous close above the moving average. So as you can see, a good fake out example is this right here. See this bullish engulfing candle after this reversal candle. Bullish engulfing. If we had another green candle, that would have been a buy entry signal for the 200. But as you can see, we didn't get a buy signal. The next candle was a red candle, which is a bearish candle, and this is a reversal. So if you go on smaller time frames, you will see the reversal and the dissecting of this reversal move, rejecting the 200 SMA. And obviously, price action just told you that we're not strong for buys because of this imbalance right here that we would have had to take out. So you see how we went down, closed below the moving average right here, and came back up to retest the moving average and major move to fill this level here, which this was an imbalance in this bullish price action. Also, right here. See how that came back down and rejected the moving average, and right here is another example, and it formed this strong area of support. So we're going to get into support and resistance on our next videos, but this is just an example of how you can trade from the moving average right here. And you can consider this as a head and shoulders on a smaller time frame, shoulder, head, shoulder, I guess, or shoulder, head, shoulder, this section right here. But back to the main point of this video, moving average line. So the 200 SMA is probably the most widely used moving average line just because of it's over 200 days in a year, and it's less than 300 trading days in a year. And so this is pretty much what everybody uses. Like all the big time companies, they all use this line as an average for where is the market pretty much. This is actually a great level right here. See how it extends level right here, rejection, broke through, gapped, came back up. We're gonna test this. Took a while, but we came back up and caught this gap. But moving average. So if when you want to go back testing this moving average, you just want to go based off of the trend. And this is a great tool to identify a trend. So if you're predicting a bullish trend, you see this fake out right here, came back down, retouch this level of support, shot back up to the moving average. Now we're in a big uptrend. So imagine if you just trading with this moving average by itself and your exit indicator in that language is for algorithmic trading, I would say. Imagine you only taking sales below the moving average, so you're not going to get out of this trade until you close below the moving average, right? So this trade would have lasted all the way onto about here when we finally closed below the moving average. It would have looked something like this, obviously, because this is the close of the moving average, but you can pretty much use other moving averages to build to your strategy technically. So like the 50 SMA. So if you want an exit indicator of your 200 SMA entry, then the 50 is a great example because after this 50 moving average was crossed, which is the darker blue line, you can see we ended up going right back down to our 200 SMA, which is around here. And my first couple years trading, I used to use moving average crossovers. They work pretty well with determining the trend, but they were actually kind of laggy and late. So I use a lot in my algorithm, I use price action indicators, which help me gauge price action. But when I'm in session, I kind of only just watch the charts naked, or I watch Hikanashi charts because they're a little bit smoother and they take the average price of the candle and the previous candle close into consideration better than normal candles would. But that's pretty much it for this video. It's pretty short, and when you're looking for buys, just use the 200 SMA to confirm your bias and your direction of a trend. So I'm using just a regular close 200 SMA. If you're on TradingView, all you gotta do is click the backslash on your keyboard and scroll to the SMA. You should have it. You can just search it SMA or SMMA. It's the official name of the SMA that I use is a smooth ED with on the end moving average. Okay. Now, say for instance, you want to use something like the 50 moving average to confirm your trend and something to trade from. So like you can use this moving average like a big trend line. So say for instance, you're in a bullish trend, which the 200 SMA confirmed, and you want to know where's this trend going, right? You want to know how bullish or how bearish this trend is. So an example of entries that you could have if you're trading above the 200 SMA, which is this blue line, not the dark blue and the light blue, you can say this could have been an entry at the rejection of this support zone going back up into and closing above the 200 SMA. And you could have been placing buys at the rejection of this 200 SMA. So you see how we have buy rejecting this trend line 50 SMA. Buy. And all of these rejections, these could have been more entries that you could have had to triple or quadruple your profits, depending on whatever you're trading. And yes, these rules do apply, and these technical indicators are very easy to use to identify trends, short term and long term. As you can see, we're using the daily chart. So I would definitely recommend adding moving averages to your system or to your strategy just to confirm your bases and create a higher confluence for you to have a higher probability trade to happen. So just like we're coming down to this 200, this 50 moving average right now, in which these sales are caught and these sales are caught at the rejection of this level, you can see we have a gap and a reversal candle. So this is a bullish candle, bullish engulfing pretty much took out this price action candle, this bearish price action candle. Then we came up to this level on 11:01, which is the first day of November, and it was a bearish candle. Basically, it's a rejection candle. It's saying that buyers are exhausted at this area. We're not taking out these highs, and this is a level of support. So I have a monthly fair value gap range on my technical chart and pairs that I actually trade at this level, and that's why my bias was short around this level for sales. And this is the move I caught. It was around 4,000 pips on US SEC and US DDK. These are the pairs I caught it with the dollar. because dollar is the base currency of these two forex pairs that I trade. And you can see we can come down to this 50 and reject, or we can break through it, break and retest back up to this 50 SMA and come down to the 200. Just like this example, buyers got exhausted, kind of a gap here, but we shot down, came back up, retested to 50, shot down to the 200 and retested these levels. Then we did it again here. Buyers exhausted, shot down, broke through the 200 and formed a new low, a low of 99, around 99, 99, 800. So that's going to be my finish take profit on the weekly, monthly chart to price action to drop down and take out this low of 99,578. If you did like this video, please subscribe and like the channel. Comment down below any questions you ask, anything you want me to go over as far as with moving averages, with price action and things like that. I do use a combination of a couple moving averages in my algorithm. I will be breaking down this entire system, but it's only going to be accessible for Southside Wall Street. So follow me on Instagram at JRoB and DM my page, my company page, InStock, INSCOCK 247365. If you have any questions regarding how I designed and created my algorithm and how I use it. And good luck trading on Sunday. Today is November 4th, 2023. Let's end this year off strong and Southside Wall Street. He remains changed forever.